What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is EURUSD. Now, why do I want to speak specifically about EURUSD? Because the market has just provided exactly the move that we wanted to see from our previous analysis on the pair. So now it's time to see where we can be looking for the next potential opportunity on it. Now, as usual, I will be first covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market, and by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probabilities opportunities on EURUSD. So starting here from the technical aspect of the pair, what do we have? Now, we will be making a full multi-timeframe analysis, so let's start from the monthly timeframe. Now, here on the monthly, what we can clearly see is that the market is currently testing the previous monthly resistance, which is now turned monthly support. Now, this is a very basic concept in the market. If you have previous resistance and the market breaks above the resistance, at that point, the previous resistance is turned support. And this is in fact exactly the area that the market is currently testing, the previous resistance turned support, which is also the previous high that the market had created. In fact, from here the market had started all this move to the downside. The market just broke above the area, and at that point the previous resistance is turned support. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that we had a perfect 50% retracement. Now, if you're asking yourself, okay, but why has the market retraced exactly to the 50% of the Fibonacci taken on this impulse? Now, the reason for that is that the 50% was the Fibonacci level that was aligning the best with this structure. In fact, we had a perfect 50% retracement lining up with this previous resistance, which at that point is turned support, meaning that at this area, what we actually had was a confluence of support given by the previous resistance turned support with the 50%. And in fact, we can see that this is exactly the area that the market has tested before starting this rejection to the upside, which is in fact exactly what we wanted to see. So here in the monthly, the situation is quite clear. We are currently rejecting a quite strong confluence of support. Going down on the weekly time frame, what do we have? Now, here in the weekly, the price action that the market has been printing lately has been quite clear. We had a nice impulse to the upside, followed by this corrective movement. Now, if we look at the structure of the market, what we can see is that the market has just created an inverted head and shoulders. In fact, we had this left shoulder, head, and right shoulder here. Now, if you cannot clearly already see this, what you can do is you can go down on a line chart. Now, when you use a line chart, what you have is actually the closes of the market. Specifically in this case, since we are on the weekly time frame, you will see the weekly closes. And if we look at this weekly closes, what you can actually see is that we have this previous support, which is now again support here because this close here was a very strong support area, which now is again support here. And in fact, we can see that this is exactly the area that the market has just tested before starting this rejection to the upside. So at the moment on the weekly, we have previous support, which is now again support here, and the market is in fact rejecting the area to the upside. So both on the weekly and monthly, the market is currently rejecting quite strong support. Going down on the daily time frame, what do we have? Now, here in the daily, we have quite interesting price action. Now, I had spoken about EURUSD quite a few times in the past. I spoke about EURUSD after the market had provided this W formation here. When the market was at this level, I made a full breakdown explaining all the reasons for which we wanted to see the market create this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this W formation, and from here I made another breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and from here I explained all the reasons for which we expected the market to create this move to the upside to go and complete the pattern at this previous support, which is then turned resistance. Then the market provided this M pattern, and from here I explained all the reasons for which first we wanted to see a correction to this area. Then from here I explained why we wanted to see the move to the downside, and again, that is exactly what the market did. And from here I explained all the reasons for which I wanted to see the market create this rejection, and again, that is exactly what the market did. Then we had the creation of this M pattern, and from here I made another breakdown explaining why we wanted to see the market create this move to the upside, and with the very last analysis I explained all the reasons for which we wanted to see a correction for the creation of this inverted head and shoulders before the continuation to the upside. And again, that is exactly what the market did, and the market provided a perfect correction exactly to the 0.32 of the Fibonacci taken on the impulse leg, which is in fact what we wanted to see from the first place before the continuation to the upside. And by the way, I will link in description all this previous analysis. You find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. However, on the daily, what do we have and how we can be looking for the next potential opportunity on the pair? Now here on the daily, what we can clearly see is that at the moment we have broken new structure to the upside. In fact, this area was acting as quite strong resistance. However, now that the market has broken above the zone, this previous resistance is now turned support here. So if the market will go for a retracement to this area, we can be looking for the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds, so the non-commercials in the market, so the biggest speculators in the market are doing, what we can see is that with the last reports, they have been increasing their net positions. We went from having 137k net positions all the way up to having 140k net positions. Overall, at the moment, we are sitting with 222k long positions and only 82k shorts. So overall, we have a quite high long positioning respect to the short. So overall on the euro, we can expect more continuation to the upside, considering that the long exposure is 33% and the short exposure is only 12.3%. So overall, we can definitely expect more continuation to the upside. Now, as I already said also earlier, if you have an impulse in the market and you want to measure a potential retracement, what you have to do is take your Fibonacci from the high to the low of the impulse, actually from the low to the high, since this is an impulse to the upside. And what we can see is that we have a perfect 0.32 and 50% Fibonacci retracements, which are lining up with this previous resistance, now turned support, meaning that this area here is a quite strong confluence of support area, which, if the market will provide a retracement to it, we can definitely expect the market to reject it to the upside. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will provide a nice correction to this area, then inside of here, what we will be doing with students is monitoring price action on the 4-hour time frame. Now, why 4 hours? Because monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So inside of here, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside with the creation of a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.